Hi, I'm Apurva Sheth and I welcome you to this latest edition of Fast Profits Daily. Now, over the last 2 weeks, I've been talking about various kinds of time frames that one should use for trading and analysis. We saw that for a swing trader, one could use a daily time frame for identifying stocks and trends in them. And once you pick a stock which seems to be a good bet for trading, then you can go on a higher degree time frame, that is a weekly time frame, and confirm your view. If the view is confirmed, you can go on a lower degree time frame, that is an intraday time frame, to identify your entries and exits. So swing trading is quite simple. However, the problem arises when you are day trading. Normally, what people do, they shift from when they are successful with swing trading, they shift to day trading, and that's when the matters get complicated. When you move from a daily candle or a daily time frame to a 5 minute or 10 minute time frame, that becomes very difficult to trade because 5 minute time frame acts because 5 minute time frame acts very differently than a daily time frame. What I suggested is that a day trader could use 15-minute time frame for identifying the trends and trading opportunities. And once he gets that stock that he is looking for, which looks good, he can then go on a higher degree time frame. Now, a higher degree time frame for an intraday trading would be something which is close to the 75-minute chart. Now, I explained the reason why one should use a 75-minute chart because a 75-minute chart exactly divides a trading day, which is from 9:15 to 3:30, into five equal sessions. So that's no other chart of a higher degree time frame. And by no other chart, I mean the 60-minute chart does not divide the day into equal sessions. So I prefer a 75-minute chart over a 60-minute or any other time frame. Now, a lot of viewers wrote that a lot of broking platforms do not allow to view 75-minute chart. For them, I would suggest that you could go with a 60-minute time frame, or if your broking terminal allows, then you could use a 25-minute time frame, which will exactly divide the 75-minute into three equal sessions. So you can then go with 25, 15, and 5 kind of a time frame. So now today we will see how one could practically use these kinds of time frames to identify trading opportunities, especially on an intraday basis. So now you can see my screen. I have all the three time frames that I spoke about. So here in the first panel, this is the 75-minute chart. Uh, the second panel is the 15-minute chart of Nifty, and the third panel is the same chart of Nifty but on a 3 minute time frame. So you can see that as you go low on a lower degree time frame, the zigzag nature or the up moves and the down moves get much more extreme, and it would be difficult if you are trading a smaller degree time frame, a 3 minute time frame or a 5 minute time frame. So that is the reason why I prefer looking a higher degree time frame first, and then only use smaller degree time frames for taking entries and exits. So now today we will also see what kind of indicators could be used. Now, before I go into these indicators, I would like to tell that there is no right or wrong way to use specific indicators. It is absolutely dependent on the trader's choice of indicators. There are 250 indicators and many more that a trader could develop on his own. So it is completely on his own discretion what kind of indicators one could use. I would recommend, this is just one example, what indicators one could use. So here is the 75-minute chart. Now here I have plotted a simple 20-day moving average, which helps me determine the trend. And I have also used moving average convergence divergence. Now this is simply a indicator which plots the difference between two moving averages. So if the shorter moving average is above the longer term moving average, then the indicator will be above zero, and it indicates that the trend is positive, the short term trend is positive. And if this indicator is below zero, then it will indicate that the trend is negative. So on the 75-minute chart, I use moving average or MACD, what most traders call, to determine the trend. Now, once you have determined the trend, so basically, whenever I study charts on an intraday basis, I use only 75-minute charts, and all my studies which are there are all my trend lines tools which I draw are on this 75-minute chart. Now, once the trend is determined, whether up, down, or sideways, then one could use the 15-minute time frame. And here what I use is an ADX. Now ADX is an indicator which tells you the strength of the trend. It does not tell you whether the market is moving up or down, but it tells you whether there is strength in the market or not. So the white line that you can see out here tells, if it is trading above 20, it would tell that there is strength in the market or there is strength in the ongoing trend. And if it is trading below 20, then it would suggest that there is limited trend. And if there is this limited trend in the market, then one should avoid trading such kind of stocks or market. So on a 15-minute time frame, I use an ADX, which will help to determine whether there is strength in the trend. So there is a saying that never long or short a dull market. So basically, ADX helps you determine whether the market is buoyant or it is dull. So now let's move on a 3-minute time frame. So the indicators which I use on a 3-minute time frame are the RSI. Now RSI is a bounded oscillator which tells you whether the market is overbought or oversold. So here in the bottommost panel you can see is the RSI. So a best entry from RSI perspective would be when the RSI is trading near its lows. So RSI ranges between 0 and 100, and when it's trading close to 20, it's known as oversold levels, and when it's trading near or above 80, it's known as overbought levels. So if you want to take an entry from a long perspective, then when the RSI is trading closer to its oversold levels, that would be a good time to enter. And if you want to sell, then the ideal time frame would be when the RSI is trading near its oversold levels, near its overbought levels. And apart from the RSI, I also use a Heikin-Ashi candle, which you can see out here. Now it is a simple version of the same candlestick patterns, but it filters prices in such a way that you will not see gaps on the chart. So as you can see out here, there was a gap when the Nifty opened, but on the Heikin-Ashi candle, there wasn't any gap. So it helps you determine the trend much more clearly. You can see that the Heikin-Ashi candle is also trading in the red when the markets were trending lower. So it helps to determine uh, the trend on a shorter time scale as well. So that's how you can use these three time frames for analysis along with the indicators. Now, I hope that this helps you with your analysis and trading, and this will help you become better trader. Now, I hope you enjoyed watching this video, and in case you did, then please like it, share it, subscribe to our channel, and also share this video with your friends who may be struggling with day trading. I'm sure that this will help them improve their trading. So that's all from me for today. Thanks a lot and have a nice day.
Also, don't forget to sign up to our free newsletter, the Fast Profits Daily. If you sign up to this newsletter right now, then you would get access to this free guide, how to trade the markets like a pro. So don't miss this chance and sign up right now.